Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on commercial papers explained, what every investor should know. As investors search for opportunities that offer attractive returns, commercial papers, commonly called CPs, have become increasingly popular. They may often offer higher returns than treasury bills, but investors must understand that the higher return comes with additional risk. What is a commercial paper? A commercial paper is a short-term debt instrument issued by a company to raise funds for its immediate business needs. In simple terms, when you invest in a commercial paper, you are lending money to a company for an agreed period. The company promises to repay you at maturity together with your return. Companies may issue CPs to finance inventory, to pay suppliers, manage working capital, or meet other short-term financial obligations. Unlike treasury bills, which are issued by the federal government, commercial papers are issued by companies. Repayment, therefore, depends on the issuing company's financial strength and ability to pay. How do commercial papers work? 1. Commercial papers are commonly issued at a discount to their face value. 2. The face value is the amount that the investor will receive at maturity, while the purchase price is the lower amount the investor pays at the beginning. The difference between both amounts represents the investor's return. A simple example: assume you want to invest in a commercial paper with the face value of 5 million naira. The quoted rate is 18% per annum, and the investment will run for 180 days. The 18% is an annual rate, so you will not earn the full 18% because the investment is only for about 6 months. The gross return is calculated as 5 million naira multiplied by 18% multiplied by 180 divided by 365. This gives approximately 443,836 naira before tax. A withholding tax of 10% is then deducted from the return. 10% of 443,836 naira equals 44,884 naira. The net return after tax would therefore be approximately 399,452 naira. Because commercial papers are usually sold at a discount, you will pay approximately 4,600,548 naira today and receive the full 5 million naira at maturity. In summary, you pay about 4.6 million today, you receive 5 million after 180 days. Your net income after tax is 399,452 naira. Although the advertised rate is 18% per annum, the effective net yield after tax is approximately 17.6% per annum. The yield shows the actual return on the amount you invested after accounting for taxes. This example excludes other transaction charges that may apply. The precise calculation may vary depending on the offer terms, so always read the commercial paper quotation or offer document carefully. Minimum investment and investment period. The minimum investment in many commercial paper issuances is usually 5 million naira, although this may vary depending on the issuer, issuing house, or investment platform. Commercial papers are short-term investments and may have tenors ranging from 90 days, usually not exceeding 270 days. Investors should also be prepared to hold the investment until maturity. Although some CPs may be traded in secondary markets, finding a buyer before maturity may not always be easy. Do not invest money that you may need urgently. What should you check before investing? 1. The most important consideration is the quality of the company issuing the commercial paper. 2. Check the company's credit rating, profitability, cash flow, existing debt, and history of meeting financial obligations. A strong credit rating provides some comfort, but it does not eliminate the risk of default. 3. You should also understand the company's business and the reason for its borrowing. Confirm that the commercial paper program is properly registered or listed on the approved securities exchange and invest through a licensed financial institution. 4. Do not choose a commercial paper simply because it offers the highest rate. A very high return may sometimes be compensation for taking a higher risk. Are commercial papers safe? Commercial papers may be relatively low risk when issued by financially strong and well-managed companies, but they are not risk-free. They are usually unsecured, meaning no specific asset is pledged to repay investors. If the company experiences financial difficulties, repayment may be delayed or investors may lose part of their money. Commercial papers are also not the same as bank deposits, and your capital is not automatically guaranteed. In summary, commercial papers can offer attractive short-term returns and help diversify a fixed income portfolio. However, always look beyond the rates. Understand the effective yield, the maturity, the liquidity, and most importantly, the company that owes you the money. When in doubt, consult a professional investment advisor before investing. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.